where you got started and how you've gotten here to where you are today.
Absolutely. Nicole, it's great to be here. We chatted a little bit beforehand and caught up again, after a lot of discussions. So yeah, I've been looking forward to this. So it's good to hang out with you. A little bit about my background. My family is entrepreneurs through and through. So I had dads, uncles, cousins, grandfathers, people that were very, very, very entrepreneurial minded. So that was kind of the path for me from day one. I just assumed, really, truthfully, that I'd be running my own business, that I'd be strategically setting things up. My heart and my personality really pulled me more onto the investment world. I was looking for passive income strategies that were very consistent, where I could focus on growing my business and growing a lot of wealth there while getting a lot of income on the other side, on the investment side. So I actually made that my full-time passion at Saint Investment Group to invest in passive income and grow those for other investors after we sold a number of companies in the past. So where we're at today is we focus on building passive income full-time, and we kind of decided to go to the big leagues and step it up on that side. But passive income, having a lot of freedom around that and a lot of entrepreneurial minded people surrounding me in my everyday life, those are kind of big passions of mine.
Yeah, I love that. I definitely later want to dive into being surrounded by other entrepreneurs and people who have a similar mindset to you and what that looks like for success. But of course, we're chatting about passive income. I feel like that is, what's the word I'm looking for? Not a trigger word, like a hot keyword lately.
Totally.
In the last year or so, that a lot of people are like, I want passive income. How do I build this? So share with us what that journey has looked like for you, how you got started specifically building your investment firm, and then what passive income streams you currently have now.
Sure. So it can be, I'll just say it can be a junk word, a junk term, passive income, because of the fact that it means it doesn't have a set definition anymore. It has been a term used by like spammers and things like that over the years. So I'll define what that means to me to hopefully give your audience, maybe they have the same definition. What I'm looking for are investments that time is going to benefit, simply put, right? So that I can invest, whether it's, and that my efforts are not going to affect the investments as much, so that I can hand money off in a place where I'm going to consistently have a consistent return, that time is only going to benefit me, not be to my detriment. And those are the top things I'm looking for. So that's the simplest definition that I can give to that. I have been very active in investing and invested in my own businesses and done that along the way. But the goal was always to be able to remove money from the business, remove the money that I was making and put it towards things that had a stream of income or some appreciation. So the best things that I found were always real estate based, candidly, right? I had an ATM company for many years. That was the least passive investment of all time. Let me just get out ahead of that. Very hands-on. If there's an issue, huge, so I tried all these different avenues to build passive income, and real estate just consistently has been that. I invest in our own company. I'm constantly one of our bigger investors. I invest with quote unquote competitors because I know they're doing things correctly. They're all friends, they're all good people. So that's my definition. And that's where I'm going with it, is that at some point, the goal is that at a defined point in the future, I want to be making more and my net worth growing and my income growing from my non-active, AKA my passive investing strategies, so that I can do things like hang with my children. I have a very large family, hang with, people I care about, family, friends, etc. Travel quite a bit. We spend a lot of time overseas, other countries and in other areas. So in order to do that, I can't be working 100-hour weeks anymore, Nicole, right? In order to do that, I have to by achieving my goals, I have to invest in things where my time and my efforts are not directly linked to my success. So that's how I define passive income. It sounds like your audience, like a lot of people kind of have the same mentality, but just try to remove the nastiness around that term. And I think we can all agree on what we want out of that, right?
Yeah, totally. Okay, so let's chat a little bit about real estate. What has that looked like? And what do you hold in your portfolio? Is it single family rentals? For me, that is just, I saw that growing up with my parents and I was like, what a freaking headache. What does that look like for you?
So where we're at today, we've done all kinds of things. We just crossed over 200 million in assets under management, 206 million. And so we've done a little bit of everything over the years. My goal and how I started in real estate was to find things that were off market, that were like super niche products and niche opportunities. Usually they had problems. Usually I could get a huge discount. That was my goal. I said, hey, if we can find these for good deals, we can partner with really good people, and that would provide the passive income, right? Like that was the mindset going through this process. I was lucky to have amazing mentors along the way, people that, you know, eventually are multi-hundred millionaires, right? People that, you know, are, you know, really, really close, that have given me a lot of good guidance. But where we're at today is we just said we want to simplify things. We want to simplify our focus, and we wanted to avoid what you're talking about, which is like a ton of single family, one tenant, tenants and toilets, all these headaches. We identified 2 places that were the best investment opportunities for the best passive, the best opportunities, and the best upside. The first for us was single family mortgages. Okay. Single family mortgages. So the world's a big place. The finance industries of each company, or excuse me, the finance industry and the finance culture of each country is extremely different. So the US has some pros and cons, right? There's some goods and bads. One of the best things of the US financial system is our mortgage system. We do 20, 30-year mortgages with fixed interest rates, with conservative terms. So that means you and I today, Nicole, could go buy a house in the US and know what our payment would be for the next 30 years. There's basically, you know, close to no other opportunities for investing to have that kind of stability over several decades. So what we did was leaned into that quite a bit. That's the first. The second is industrial real estate, where we actually own the buildings, we own the properties, but you know, it's not the right market cycle for that. That is, we've taken our foot off the gas. So really, the most passive, the most structured, the most safe and secure is US mortgages, and we invest in those at scale because it's checked the most boxes out of anything we've ever done.
Interesting. You know, it's so interesting, me as a non-American living a very global lifestyle that is largely not based in the US. I actually can't really physically be there for too long because of the way that my business is structured.
Sure.
But we've been looking into real estate opportunities here in Mexico, but also in other countries as we're traveling throughout South America for various different reasons. And it's so interesting when I compare it to Canada and then, of course, to the US, where the mortgages are fixed. They're wildly low. And you think that they are high. I guess if you're living in Canada or the US, I mean, I hear people complaining about it, family, friends, like, oh, it's so high. Okay, we'll try Mexico, where it's 15%, and that's absolutely normal. And it's just a completely different market. And so, you know, it does make me think, and I have been thinking, my partner and I, about the US, but it's tricky to get into that system when we can't really be in that system, and I don't really want to be in that system. But I think if you're listening, and I know a lot of Americans are listening, there's so much potential in real estate. And I've actually never heard about the kind of mortgage route that you're speaking about, but I think that that's of a lot of interest, because I believe that real estate is how you can just exponentially grow your money. And apparently, according to you, it can be passive as well, I guess, if you have the right people on your team. Yeah,
there's the global real estate market's very complex, and you're dealing with, basically, you're making bets on things like governments and what the foundation of their land rights are and how they track property ownership. You know, there's amazing markets that don't have good data. They literally don't have good records. So there's disputes all the time on paperwork of who actually owns a piece of land. That gets freaking complex, right? And that's, you know, it's worrisome on the investment side. So in the US, again, for better or for worse, there's things I could talk about our financial system all the time and have huge comments on, to the contrary of the, you know, the best system. But I do think we have one of the best property rights systems, amazing tracking. You know, you have the US dollar in the mix as far as backing a lot of things up, which today holds a lot of weight, a lot of value. And at the end of the day, you have this long-term, multi-decade structure with fixed rates, which, like you said, Nicole, that's super rare in the world. Most of the world is not that. It's variable rates, even for your home. So you're making big bets. You're really budgeting with a lot less certainty of what that looks like. So that creates a system in the US. I think the last number was 98% of mortgages in the US are structured like that. So the vast majority of one of the biggest industries of the largest economy in the world.
Okay, so two things I want to dive into there. You don't have to go into great detail because then that would be probably a 3-hour long podcast. But some of the cons you mentioned, we were talking about.
I'm an open book. Yeah.
We talk about a lot of the pros, and with other guests on the show as well. There's a lot of pros to living in the US, especially if you're investing in real estate. What are some of the cons that you've seen? And then going off of that, my next question, which may tie into this, so I'm letting you know beforehand, is going to be a little chat about the US dollar and the future of that.
Sure. I would say that the US, the biggest concerns I'm seeing in the marketplace right now are part of it is access to money, which is a weird thing because if you look at a lot of the economic data, savings, there's a lot of solid savings, labor is very high. We have all these really great numbers on one side of the economic spectrum. The reality is the qualification rate for a lot of mortgages is not as high as it should be or would be ideal if it was. That's one. The second is the US has this ridiculous ability in the last, I don't know, it's multi-presidential. Let's just say that. So like decade plus where we throw money at things. We throw money. And the US has prided itself in for so long that when we spend money and we go into debt because we go into debt on our government spending, that when we do that, we actually have a plus ROI. We have a return on investment that's higher than the debt that we're incurring. That's kind of one of the ways that in the US that the Federal Reserve and Congress have been constantly able to sell this to the public. They say, well, okay, it might cost, 500 million or 500 billion, right? But the ROI on that's actually going to be higher. So it's a net gain for the economy. It's a net benefit to the American people, the taxpayers. We're seeing that there are a lot of projects government-based that have had a negative ROI. So if you look at, let's say, China for a competitive economy, one of the issues with China is they had this rapid growth. They reinvested in infrastructure, which is so important because their people need roads and need to be able to get to work and support the economy. The issue with China was that they had some inefficiencies that led to negative ROI in infrastructure projects, meaning the amount they spent was less than they got back on that project. The US, we're dealing with a lot of that right now. That is extremely alarming when you're taking on record debt. So we're about to cross the threshold in the US. We're about to cross the threshold where our annual cost of interest on our debt is going to exceed $1 trillion. So if you were to ask me, Nicole, what my biggest fears are, it's not the average person in the US, although there's pluses and minuses to the current state of affairs in the US. It's that the government spending is getting to a point that's really concerning because all those issues come up later.
Interesting. Oh my gosh, there's so much that we could dive down on that road. No, it's interesting. I'm very interested to hear your take, being, of course, in the US and operating multiple businesses every single day there and what that looks like. So my next question was the state of the US dollar, inflation, what that looks like. I'm also curious, even just your own personal take and what you've seen. I don't live in the US, I never have. Sure. So if you have seen over the last few decades, but honestly, probably the last 4 years, if you've seen any sort of changes in your life and business.
Oh man, so many. So I'll quantify that and I'll qualify that. So there's been a ton of changes throughout the US, right? There's been a big shift in the entire world. Like if you look at the whole world economy, geopolitics, really since the year 2000, you've seen a lot of crazy shifts, right? In the US specifically, to answer your question, the spending's gotten crazy. I kind of went into detail there, but the way that the government balances its books has changed a lot. So the question of the US dollar, right? Let's see. I actually have a dollar right there, right? That's the first dollar I ever made from any entrepreneurial endeavor ever. So it's very special to me. But that dollar today is worth I don't know. If you really calculated it by the time when I earned that dollar, it's probably worth 80% less than it was at that time, 70% less.
So
right?
When did you earn it? What year was that?
Rough calculation would be 2000, 4 or 5.
Okay.
right? I'm using loose numbers, but I'm just kind of quick mathing a number of things there. But it's just to give an illustration of how much value the US dollar has lost. So during just COVID, since 2020, we printed over 40% of every US dollar that's ever existed in the US. Okay. So think about the increase in the money supply there. Now, if you go further and you see that inflation kicked up to 9.1, 9.2% in the middle of 2022, and then you see supply chain issues, and then you say huge issues that were occurring in the US in small businesses, and then you see huge amount of lending. All those things occurred in that post-COVID, during COVID cycle to really degrade the dollar in some big ways. So the economy where we're at today, post-COVID world, Bidenomics, whether that's pro or con, depending on what stats you're looking at, right? I'd say in the last 4 years, not good. I'd say in the last 4 years, very, very bad, right? And that's not just a slight at, President Biden. I agree with a lot of the stuff that he's done, in the geopolitics sphere and worldwide. I just don't think he's managed the economy well for the U.S. Now, what does that mean specifically for the dollar, right? And especially this affects people worldwide because the dollar as it stands today is the global reserve currency. It's what we trade oil on for the most part. It's what many countries own and hold on to as their backup currency so that they can do deals internationally. That is a huge bartering chip for the US and arguably is the reason that the US gets to sit top of the heap. We also have the largest GDP and a lot of other amazing financial benefits to our system that's very advanced. But the global reserve currency status of the US dollar is not to be understated. I truly believe the US would go to war over that. Full-scale hot war, unquestionable. Just to be clear of how serious I believe that is for the US. Now, what's the future look like for that? I think despite all of the mishaps that the US has had, all the mismanagement of the US budget, all of the overspending, we shake out in the US around 120, 130% of a ratio called debt to GDP. So it's how much debt we have versus how much money we actually bring in as a country. We're about 120, 130%. To give you an idea of a comparison, number 2 in the world is China. Second largest economy, they're about 240% debt to GDP ratio. So they don't even compare, it's not even close. They're much worse off. So it's not that the US is doing such a good job. It's that there's no one else that even comes close to doing, I don't even know how to put it. Everyone else is very often much worse off than the US. Not that the US is so good. It's that we're in a weird place in the world where a lot of mismanagement of a lot of different governments. So does the US deserve the reserve currency status for their dollar? I don't know. I think that's a different debate than who could replace the US. And I don't think there's a good answer to that now. It's not going to be China, which would be the second largest economy. China likes to control their currency very closely. They want that close to the vest. They want to monitor it on a very high scale. That doesn't work well when you're doing $40 trillion a day in transactions like the US dollar is, right? It's too big. You can't monitor every transaction. So China's kind of off the books for a number of reasons, including the fact that they want too much control. Then you go into questions like, okay, what about the euro? I mean, it's an amazing currency. It really draws many important countries together, but it's a minority. It's a vast minority of global transactions are on the euro, right? Then you start to get into other currencies, et cetera. The bigger question, which actually is a real conversation, is if a block of countries get together and create a currency, right? So that's like if BRICS, Brazil, Russia, India, China, South Africa, and a bunch of others that are slowly being added into the BRICS, block of countries, if they put together a currency. That's something that's actually interesting. That's something that I believe could disrupt the US dollar. The freaking issue is none of them actually get along to at such a scale to trust each other enough to put together a currency. We have not seen that degree of cooperation. BRICS is a economic union. It's saying, hey, we're going to play nice with each other when it comes to transactions. But at a high level, it has not been able to unify enough to put together a currency. So the really long answer to your short question is, I think the US dollar, despite the US doing almost every single thing wrong as far as it relates to like currency management and not overprinting and not overspending, going way above and beyond what they should be, I still think the US dollar just doesn't have a competitor to step into that role of a global reserve currency where the whole world can agree that they trust that currency more than the US. And I think that's the biggest factor.
Yeah. Yeah, I mean, I agree with a lot of what you said there. I think this is a totally different podcast, what I'm about to say, but just to touch on it, I think that for me, living the lifestyle that I live, where, I have bank accounts in 10 different countries and I don't trust any one government to hold all of my money, my assets, my investments, let alone my citizenships. For me, I'm very bullish on decentralization. And so crypto comes into play for that. Do I think, in my lifetime, especially, is it going to become so widely used? Probably, unfortunately, that's just not the reality, but it is widely used in a lot of sectors still for certain things. And so I'm very bullish on that. The future of what that's going to look like in a few decades with everything we have now. I mean, like VR and AR and AI, like who knows what that will look like. But for me, that would be the best way to go. But again, then you have stable coins like USDC and Tether that are tied to the US dollar. And if you want to off-ramp your crypto, you're going to have to put it into some sort of stable coin. It's probably going to be USD. So we're kind of going around in a circle. But yeah, that could be like a whole nother podcast. But I am very bullish on crypto. And I think many people are, especially because I would love to see the government just not printing. And there's definitely some benefits with decentralization for that. But my question for you, so we have a lot of listeners who are looking to leave their W-2 job or starting their traveling journey and looking to create that passive income. And I'm a big believer, as I'm sure you are as well, that in today's day and age, especially in the US, but I believe most Western countries, a W-2 employee job is just not cutting it anymore. If you want to actually have a family and live a somewhat good life and buy somewhat healthy groceries, that job is not going to cut it. You really need to work your way toward entrepreneurship and being a business owner. So what are some of those initial steps that you would recommend somebody take if they're interested in creating a partly passive, eventually becoming passive portfolio or business for themselves?
This is so close to my heart, Nicole. I can't even tell you how much I love this question. The first is, I think you're right, digital currency. If you wanted to ask me and you said, Nick, what would your second currency bet be? It would be Bitcoin. Okay. And I don't say that casually because I'm in American finance, which looks down at a high level, like the Chase banks and the Bank of America's, they freaking hate all the crypto, all the crypto holdings. I think Bitcoin is probably, and again, there's a lot of coins that are way beyond my scope of understanding and my scope of expertise, but I do invest in Bitcoin. I do understand the basics of Bitcoin and appreciate that. And I regularly invest in that. I'm excited to see what happens on the halving and a lot of those pieces upcoming. All that said, to your question directly, I can give tactical and then I can give strategic. So tactics are like exact what steps to take. And then I'll give I can give a bigger picture. Tactically, I think the number one thing is for people to understand what their skill set and what their leverage points are. For me, it was always growth of a business. That's what I leaned into. I could understand what things, if I pushed this button or I twisted this knob of the business or I ramped up this thing, I could see it. I understood it. I could visualize how that would impact the business in a positive way. So any business that I'm a part of ever, it's always going to be me trying to lead the charge on business growth. That's my skill set. Okay. So for other people, it's understanding what they bring to the table. Right? Anything that and here's the cheat code, anything that pushes revenues goes to the front of the line. Okay. So if your skill set can directly impact revenues of a business, you have a huge leverage point that gives you a lot of credibility and kudos any way that you choose to enter the business world. If you can push top line revenues, you can win. Right. The next is, I think it's a strategy of like basic building blocks. For the US, I think that the number is 250,000. That's the first point you want to reach with your income. And I think that it's, whether it's setting up a small business, whether it's small business plus investing, et cetera, the first giant rung of the ladder, at least in the US, globally, money goes a lot further. Lifestyles are a lot better per currency, right? In the US, it's getting to the first 250, because what that unlocks in the US and what it unlocks globally for you to invest into US assets is different investment strategies for accredited investors. So I don't mean to like turn anybody off and say, hey, that's such a big rung on the ladder. For me, if it's me starting all over, my only goal is to hit that income figure and then start investing. From there, I'm looking at fixed income strategies. I'm looking at the highest rates of return that I can get consistently month after month to know what those fixed income strategies are on a return basis. So if I can get 12% somewhere, or 10%, 12% somewhere, or 10% somewhere, or 14% somewhere, and it's fixed, then I know I can just shovel all the money that I'm making from my business, all my net income, into those fixed income strategies, and I can watch a linear increase in my income, a direct linear increase. So that's step 2. First is build your income to that level. I would peg that at 200, 250. I would say in order to get to the next step, which is to build your fixed income, to build your direct secondary line of income. The third, once you feel like those first 2 are locked in, is then you start worrying about things like appreciation. You start worrying about assets that over time are going to increase in value. Things that you can take your foot off the gas and just know, hey, if I don't do anything for 10 years, time actually works in my favor. And I wake up in a position where my net worth went up. So on the first, you're getting your building block. You can apply to all the others. The second is you're boosting a return that's way above inflation, that's way above any issues you're going to have. So you're actually juicing up your income. And then once you feel stable in that second step, you move on to appreciation, where you can really let your foot off the gas. And while you're sitting on a stunning beach somewhere, having a drink, your investments are actually increasing in value. That to me is the 3-step process. And it's using your skill set, whatever you're best at, to get there. But if I had to do it all over again, that's absolutely what I'd be focusing on.
So do you have any investments that you hold in stocks, bonds, ETFs, or is it basically all just real estate for you?
Oh, so I kind of did what I outlined just now. I do invest in stocks, but I'll put it this way. 98% of my stock holdings are ETFs, because I can't be bothered to choose individual stocks. I freaking work a lot. I really want to spend time with my kids. I am not reading K1s and quarterly filings and Q2 filings and all the BS. I'm not reading it. I'm not doing it. I don't want to do the diligence. So I buy really boring stocks on that side. I buy ETFs of the S&P 500. That's about 80% of my stock holdings, because I know, if the top 500 companies, the S&P 500 is the top 500 companies in the US. If those 500 companies go down, the US goes down. Okay. So either the whole system's going to go down anyway, and I'm going to have $0 anyway, or I can rely on those 500 companies that they're going to just at least survive so that I can get my money and trade as I need to. So I am not a stock picker. I do not buy individual stocks. I buy 500 stocks at a time through, like VU is one or SPY is another. I just buy the S&P 500.
Yeah, I love that. That's exactly what I do. Just ETFs, simple, boring, and then some bonds to kind of even it out. But they even themselves out. So, okay, so the last topic that I want to touch on with you is about networking, connections, and how that has looked for you in order to reach the level of success that you have.
It's so important at this stage. And I'll give you the reasons why. Early on, it's important. Middle of the game, it's important. And late stage game, it's important. All for different reasons. Networking does different things at different points. Early on, what it does is it gets you close to winners. And that can't be understated. Being close to winners, you see what they think like, what they do, how they do it, why they do it. And you just absorb mindsets. You absorb lifestyle. You absorb systems to make what your crappy BS early systems are, because you don't know anything in the beginning, right? Nobody does. I didn't. Nobody will. You just see what winners are doing and you just try and emulate that, right? In the mid game, And in the beginning, you should be reading books and doing all that stuff too. You should be learning and having education. I constantly pay for courses. I don't even offer a course, and I still recommend people to be taking courses and learning. That's how you boost your income. That's how you boost your strategies. In the mid game, in the middle of business, while you're kind of in a ramping up phase, you kind of, hitting some good numbers and you're seeing some good progress, you start using networking as a tool to actually understand your gaps, like what you're missing. So early on, you're just trying to gain. You're trying to add pieces. In the middle, you're trying to fill in the gaps of like, okay, we're doing good at some things, but there's something that's keeping me from the high level. What is that? And you're going to see people slightly ahead of you or way ahead of you, and they're going to give you perspective that you're like, oh my gosh, I can't believe that I'm missing that. That's so obvious now. Sometimes the advice they give you takes years to implement. That's what no one tells you. One piece of advice that you're like, I really need to do that, might take 2, 3, 5 years. Like I'm acting on advice that I've gotten today. I'm acting on advice that I got years ago to continue implementing that I'm trying to hit them the high numbers on. And in the late stage, when you're like, hey, I've done everything that's in every book. We've implemented these really high level strategies. We have the team, we have the pieces, we have all that stuff. Networking actually becomes more important because you've reached a point, and I see this with people way ahead of me. I'm not saying that we've reached some super high peak and, there's nothing we can learn, but people way ahead of me, even they use networking as a tool because it's the only way that they can learn. Okay. I want to make that clear. There are no books at a certain level. There comes a point where you are so advanced in your craft, whatever that craft is. It might be marketing, it might be sales, it might be entrepreneurship, it might be investing, whatever your craft is. There comes a point where you are so advanced, there are no longer books on that. There are no longer masterminds you can take. You are beyond a level of mastery. The only thing you can do is compare notes with really high-end peers. And so networking is that tool for everyone, is that at the early levels, it drags you to that mid-range. At the mid-range, it fills in the gaps of your own skill set to take you to the higher levels. You build in the pieces that you know you need. At the highest levels, it's the only way you can continue to upgrade. You can learn on your feet. At the high level, that might cost you a lot of money. That might cost you a lot of time. But networking and understanding and having close relationships. I was on a call. I bumped into a friend at the gym this week, in the last handful of days, CEO of a very large bank. He's been a dear mentor of mine for years, just a friend, right? We sat down in a 45-minute breakfast where we had a few eggs and had a cup of orange juice. I walked out of there being like, I have 3 or 4 mental notes that could completely change my business, change my lifestyle, change how I handle my family things in a better way. Right? Those are the people that I want to surround myself with, because I can't read some of that stuff in a book. It has to come from a guy who's worth $300 million or runs a $6 billion investment institution. It can only come from people at these levels. So I'm a huge fan of networking. That's a long answer to that, but I think you can't get some of these values anywhere else.
Yeah, no, I appreciate you going into detail about that and really breaking that down into 3 stages, because everyone will fall into one of these stages. And so it really breaks it down on what you need to be doing and the action that you need to be taking at that stage. So before we close off and you share where people can find you, we've touched on a few different topics here. Is there anything that you would like to add that we have not touched on yet?
I would say, especially for your audience, it sounds like a very sophisticated audience, people listening that have a high degree of the need for freedom, AKA I'm in that same boat. I can't feel chained down. I need to feel like I can spread my legs and go, I don't like that term. Let's edit that later. But spread my wings and go check out other parts of the world and go see other things and enjoy the best things with the people that I care about most. In order to do that, I have to have that degree of freedom, and it's understanding the way to do that. So for me, it was always investing. The investing world is changing more and at a faster rate today than we've ever seen in the history of investing. I want to be clear on that. In 1996, there were 7,300 public companies in the United States, which is the largest finance market in the world. Today, there are 40% less public companies in the US. Okay. Now, today, since 1996, during that same period of time, we've seen a 6x increase of private equity firms buying small businesses. So all that tells us is that the amount of companies that are public has shrunk, and those same number of companies have now went into the private sector. So the entire investment space is shifting to a private strategy and a private structure. The average investor today, Nicole, doesn't have access to the best opportunities because they don't even know about them. In the history of the, especially the US, I keep talking about the US finance markets. The history of the US finance markets primarily were public. That is not the case anymore. So what I would say is, with the world changing as quickly as it is, with your audience being more sophisticated, and with them needing more need for freedom and wanting to travel and trying to build income and other streams of income and other strategies of income, I would say they really, really, really should be looking at the private sector. Different funds, different strategies. If they're Bitcoin or they're crypto, there are strategies there. There are people that are doing things that they will trust and believe in. If they're into real estate, they can find that. If they're into even stocks and hedge funds, they can find that. But find what they trust and find what they believe in the private sector, because the public markets are not as big as they used to, and the best opportunities are no longer there.
Interesting. Very interesting. Okay, well, thank you for sharing everything that you've shared here today, Nic. So where can people find you online?
Sure. So I'm an economics geek. We spend a ton of time on economics. We put together really long form webinars, YouTubes, etc. The best place, and the best thing, we give it all away for free. All of it. So if people want to work with us, they can invest with us. We have a fund that pays 12 to 14% returns, 100% real estate backed. And we give all of our data, all of our webinars, all of our information away from free at saintinvestment.com/resources. So saintinvestment.com/resources. We give all of our information for free, and it's a huge value for people interested in learning about passive income and investing.
Interesting. Okay, I'm going to check that out myself, actually. And those are pretty good returns. I was thinking about investing in the Mexican market, and you can get similar returns here. But, of course, there's a few different factors. But very interesting. Thank you for sharing everything that you've shared here today, Nic. And we appreciate you.
Nicole, I had a blast. Keep in touch. Let me know how I can help with anything. And let's talk soon again, huh?
Absolutely.